Stocks gain in a broad-based rally after retail data in the US suggests a more resilient US economy. IT and realty lead gains while consumer discretionary and FMCG lag.
MSCI puts off the action on Adani Total Gas and Adani Transmission due to the impact of price limit mechanisms, while input data issues push back actions on other Adani stocks in key indices. Adani stocks rally.
And Indigo Airlines owner Interglobe Aviation sees a large 4% trade in its shares, with promoter Shobha Gangwal likely to be the seller. Promoter stake sale overhang hurts the stock even as an interval of 5 months is needed between sales.
A sharp cut in windfall taxes on exports of aviation turbine fuel and diesel are positive for refiners like Reliance Industries, even as a moderate reduction in tax on crude is good for oil producers.
And Bata has decided to set foot in the apparel business to leverage its retail presence, even as it eyes sales of 5,000 crores by fiscal 2025, the company tells CNBC-TV18.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report. I'm Banglam. With me, Sonia, as well as Ekta. Good afternoon, ladies. Not looking particularly bad for the market. In fact, we have seen a good gain come by over the last 3 trading sessions, mildly off highs as we speak, sitting with gains of 75 points as against 120 points, which was about an hour ago. But nothing really to complain. All dips have been bought into in the frontline index, and 3 p.m. is what we will be eyeing because it is also the weekly options expiry. Good going for the mid-cap index as well. A lot of individual stocks doing well. And the most recent gainer is Nestle, which is currently at the high point of trade after reporting numbers just about 15 minutes ago. It was a mild beat on the company's operational performance, and that stock, look at that, up around 2.5%.
Are you sure it wasn't 2 minutes ago?
It wasn't 2 minutes ago, but I would love for it to be 2 minutes and all of us just have a lot of Maggie right now in the studio.
Kit Kat as well, right? Nestle's Kit Kat.
Kit Kat as well. And for you, Ekta, the good part will be that because this year is also known as the year of millets, it'll be a relatively healthier version of Maggie. Sonia and I were happy with the Maida Maggie. You could do with a Bajra Maggie or something of that sort.
The oats variety is also good enough.
Oats variety is good as well.
That's a topic for a different day in terms of how much oats is actually in an oats-related product. But nonetheless, for the markets, it's doing well. We're above the 20, 50, 100-day moving average at this point in time. So definitely good going for the Nifty. And not to mention that we've seen FIIs buy for the 4th consecutive trading session as well. So it seems as though there's some amount of enthusiasm and some amount of buying which is coming in at this point.
Also, I think the space that everyone is in this morning is mid-cap IT. So even as we speak, most of the mid-cap IT names, whether it's KPIT Tech, Persistent Systems, Sonata Software, LTI Mindtree, they're all up. And in fact, names like KPIT Tech and Persistent Systems are at fresh 52-week highs. So record highs as well for many of them. So I guess this is one space that is buzzing and come back into action.
The other space which I actually also wanted to bring up was Apollo Hospitals. I know it's like deja vu because we spoke about it yesterday at the same time as well. But really, you're seeing a good amount of follow-on buying which has come in for Apollo Hospitals as well. It's up another 3% today. They held their conference call during market hours at 2:30 p.m. in the afternoon. Despite that, you're seeing more buying coming in. So brokerages are a lot more positive in terms of Apollo Hospitals, despite the margins disappointing. We'll talk more about that in just a bit.
Okay, but first up, the MSCI has deferred some changes that were announced to the weightage of Adani Total Gas and Adani Transmission. They've deferred it to the May review, and you're seeing a little bit of a relief rally in many of the stocks. However, Adani Total Gas and Transmission are still under pressure. Vivek is joining in to tell us more about that and what the implications of this would be for the Adani Group stocks. Vivek, over to you.
Well, absolutely right. So in a surprise announcement today morning, MSCI said that it is deferring the implementation of the treatment of Adani Group stocks within the MSCI indices, and it's been deferred till the May review. Now, what they've actually said is that they've postponed the weight reduction of Adani Total Gas and Adani Transmission due to potential replicability issues on the impact of the price limit mechanism. What this basically means is that given the fact that Adani Transmission and Adani Total Gas have continuously hit lower circuits, the funds that actually track the MSCI index changes would be unable to make the implementation in their own funds. A recent example being the case of Piramal Pharma, where something very similar happened. Now, when you're talking about Adani Enterprises, the potential outflow, the weight reduction that was anticipated will happen. So a little over $180 million of outflows expected from Adani Enterprises as per analysts. And lastly, what MSCI has said is that going forward, the Adani Group stocks, remember all of the Adani Group stocks barring NDTV and Adani Wilmar are part of the MSCI indices. They will be given a special treatment given the fact that there is significant price volatility and a lot of news flow action too that is happening in these names.
Okay, all right. Adani Group stocks continue to be in focus. Vivek, thank you very much for providing us all of that information. Let's move on. PI Industries, that stock is in focus on the back of what was strong guidance from the management. Sonal's tracking that. She's here with us to tell us why the stock is up 6.5%. Sonal?
Thank you so much for that. Well, yes, after a strong set of numbers, the conference call commentary was also very positive. The company says and maintains that they expect 20% revenue growth with sustainable margins of around 23 to 24% in coming years as well. Additionally, working capital for the company reduced by 400 crore rupees in this quarter, which led to higher cash flows as well. So cash flows were around 700 crore rupees from operations versus 120 crore rupees on a YOY basis. The export order book stands at $1.8 billion. And while other companies are talking about weakness in export markets, they say that export markets have seen no slowdown for them. The domestic market, which was weak in Q3, grew around 2%, will see a double-digit growth in coming year, and that will be led by newer product launches as well. FY24 capex is around 800 to 850 crore rupees, which compares with 500 crore rupees in FY23. So expansion plans are there, which are the focus for the company now as well. Motilal Oswal says they have a buy rating on the stock with a target price of 4,300 rupees per share. They like the fact that operationally it has become stronger. EBITDA margins have increased from levels of 19% in fourth quarter of FY21 to around 25.7% right now. Nirmal Bang says that PI is beefing up their pharma team resources, and they're still looking for an acquisition candidate in the pharma space. At the same time, in the export markets, they're looking at pharma intermediaries, and this is one segment they'll be focusing on as well, which will be a positive going forward. So yes, on the back of these positive commentary and management commentary as well, the stock is higher in trade. Okay, 6.5% higher. Thanks a lot, Sonal, for that. Well, Tanla Platforms is buzzing in trade after it plans to launch an anti-phishing technology platform. Rima is here with more details on all of that. Rima, 8% higher now on Tanla.
Yes, indeed. So the street is quite excited about the prospects of this particular platform launch. So the company has said that they will launch Wisely ATP, A for anti-phishing, T for technology, and P for platforms. And this launch will take place at the Mobile World Congress, which is taking place on the 27th of February. While the patent of this ATP platform is still pending, the company has already set up a regulatory sandbox, which means live testing of this platform is currently taking place, but within a regulated environment. The company is saying that the validation of the impact is still in process, but simultaneously the company is in talks with 3 of the large major banks in India to launch a proof of concept. Phishing, for those who may not be aware, is basically cyber crimes which take place when someone pretends to be a trusted source and sends you a link to try and get some confidential data or some money out of it. And with digitization on the rise, phishing has actually become a big, common, growing problem, and Tanla Platforms is trying to launch this anti-phishing technology platform. Another reason why the stock has rebounded so sharply, it's also because it's down 60% in the last 1 year. Back to you.
All right, Rima, thanks a lot for that, and also important update coming in, because phishing, we've all faced a lot of random emails coming requesting us to cite or share some of our personal details with them, etc. or not. But the big question is, are people still going to call us on the phone and ask for our details or not? Rima still with us. Rima, Vodafone Idea, that's trading under pressure. What are brokerages saying of that, and does Tanla Platforms also have something to stop people from calling us?
All right, so let me tell you about Vodafone Idea. They had a conference call yesterday between 2:30 and 3:30 p.m. And the key one thing that stands out is, for the first time, the company has quantified the amount that they have to pay once all the moratoriums comes to an end. Remember, the company had opted for a moratorium on spectrum payouts and AGR payouts. The moratorium on spectrum payouts ends in October 2025, and the moratorium on the AGR payouts ends in March of 2026, which basically means almost 3.5 2.5 years from now, October 2025, the company needs to start making payouts. The cash flow relief will come to an end, and the payout number has been quantified by the company for the first time ever, and it's a massive number, 41,300 crore rupees. 41,300 crore rupees will be the annual payout that Vodafone Idea will have to give to the government on account of their spectrum payouts and their AGR dues. And to put that number in context, 41,300 crore rupees is almost equal to the current annual revenues of Vodafone Idea. If I look at the last 12 months performance of Vodafone Idea, its revenues were 41,900 and the EBITDA was 17,300. IFL says that unless Vodafone Idea manages to more than double their revenues in the next 3 years, making these payouts is going to be difficult. IFL also goes on to say the company has passed the first hurdle because they've got that government conversion in a long obstacle course. They've got a reduced rating. Nomura lowered the target price to 5 rupees, and CLSA also has a 5 rupee target on Vodafone Idea. Back to you.
Okay, all right, Reema, thanks very much for that. So that's Vodafone Idea. Stock is 7.5 odd rupees, but continues to see a lot of news flow in the past couple of days. Well, we need to take a short break, but on the other side, we'll put the focus on some more stocks which are reacting to news. Stay tuned. Welcome back. Well, steady day for the markets. We have the mid-caps which are outperforming, so up around 0.6% currently for the mid-caps. Remember, last week it was an outperformance for the mid-caps. So let's see whether they manage to get their act together towards the end of this week. A lot of stocks are buzzing within the broader markets. Nucleus Software is up around 15-odd%. Rossel India, which saw a good run in yesterday's trading session, is seeing gains today as well. So that stock is up 7.5-odd%. Gokuldas Exports is up around 7-odd% at this point. So there is a lot of momentum which is coming into specific stocks. Oil India too is seeing gains. In fact, it's gained around 16-odd% this week itself. It's up another 4% today. But the other stock that we're tracking is Interglobe Aviation from the aviation space. It's under pressure. This is following what was a large block deal that took place. Vivek is back with us. He's tracking this as well. Vivek, share some details.
That's right. So, like we had reported earlier in the morning, prior to market open, that we were anticipating approximately 4% of the equity to change hands via a block deal. So that particular deal happened. So 4.4% of the total equity changed hands via block deal, just at market open. And what we understand from our sources is that, and we had access to the term sheet, is that Shobha Gangwal was the likely seller in today's block deal. So now, the interesting part is there is a 150-day lockup period for further sale of shares from that particular promoter entity, and that means for another 5 months no overhang in terms of a stake sale from the Gangwal family. Now just to give some context, in February 2022 Rakesh Gangwal stepped down from the company board, and he said that he would be paring his stake down over a period of 5 years to nil. So in line with that, there has been continuous stake sales. At the end of the December quarter, Shobha Gangwal, Rakesh Gangwal and the Chinkapur Family Trust held 33.78% stake in the company. That now drops below 30 after today's block deal.
All right, Vivek, thanks a lot for that. So that's about, Interglobe Aviation. But now we're talking about Insight Edge, and this is our special segment. I'm looking at Bata today. Why is that? Because it's extremely interesting, what the company is doing. Over the last couple of trading sessions, we've seen some weakness in the stock, and that's on account of softer than expected numbers. We spoke to the management today. They said that there was weak demand in the sub 500 to sub 1,000 rupee footwear category. In fact, revenue was driven by price points about 1,000 and 2,000. And that, reinforces what everyone else has been saying, that there has been a divergence where the premium product is doing extremely well, but it is the lower end which is facing some problems. But the raw material pressure has eased for the company, and the 5,000 crore revenue target by FY25 is still not out of reach. That's as far as the business is concerned. On that, brokerages have written, ICICI Securities has cut their target from 1,700 to 1,500. Why? Because they say while focus on premiumization, brand perception and distribution are right steps, there will be some challenges. And footwear as a space itself does not have that sort of scarcity premium for Bata, because now we have Campus, we have Metro, we have all the other players as well. So that scarcity premium may not return. Motilal Oswal likes their plans to add around 150 to 170 stores. And the important part, however, from the management's commentary today was that they are looking to enter the apparel business to leverage their retail presence. They will share more details on this in a few months, but that I think is the most interesting thing, a footwear maker entering apparel, because globally that's what happens, right? If sneakers are doing well, people are perhaps looking at athleisure as well.
But it's also a very competitive space.
It is a competitive
it's a very
space.
low margin space as well initially, right? When you start off to
It is
penetrate
a
the
higher
market.
gross margin space, yes, low margin because you have to invest in marketing, etc. And I think
they would be sourcing it, obviously.
They would be sourcing it. The other thing that works for Bata is that if you're looking to enter athleisure, from scratch, you have to build the retail platform, etc. Here, they do have the retail platform already, so they're just sweating on those assets. And it also increases their TAM. In consumer language, TAM is total addressable market. Footwear category size is $22.5 billion right now, likely to be closer to $50 billion by FY25. Apparel category size is right now close to around $24 billion. It's likely to be around $35 billion. So, even if they were in footwear, by 2025, the total addressable market for them would be $50 billion. And now it turns out to be $85 billion. And in that, athleisure itself is the fastest growing, currently 20,000 crores and likely to be almost 41,000 crores as an overall market by 2025. So they have a strong brand out there. Power is a value brand for sports. Let's see whether they can actually extend that into sweatshirts and gym wear, etc. as well.
Okay, that'll be really interesting, right? Considering how that whole athleisure space is picking up in India at least. But earlier today, we had a chance to speak with Gunjan Shah, who's the MD and CEO at Bata India. He spoke about how the company's plans to enter the apparel business, which I guess could be the next growth trigger. Take a look.
There is a certain amount of sluggishness that you see in the price points which are below 1,000 and especially below 500. And that has seen some amount of sluggishness right from about September onwards. I think it's a cumulative effect of the kind of inflation that consumers have seen overall and the price increases that we have taken to manage this inflation from a footwear perspective. So hopefully that should even out, but that is how we see it right now. Apparel, we had started off on a project on apparel. It's a very attractive category. It's very adjacent to the kind of consumers who walk into our 2,000 odd points of sale. Right. And that has an attractive both in terms of growth as well as in terms of profit pool. We had started a certain pilot pre-COVID. We had kept it on halt. We are now aggressively restarting it. Watch this space. Hopefully, we'll have an update a few months down the line.
Okay, so 5,000 crore revenue by FY25 is not out of reach. That's the kind of numbers that Bata is looking at. By the way, the market is doing really well, so don't lose sight of that. The Nifty is now up 160 points and a lot of stocks hitting fresh highs. So, names like M&M, KPIT Tech, APL Apollo Tubes, Cummins, Persistent Systems, and all of these have one thing in common, which is good set of numbers. So whether it's Cummins, whether it's Siemens, whether it's M&M, KPIT Tech, all reported really good numbers in Q3, and all these stocks are buzzing. But Apollo Hospitals is also buzzing after a positive brokerage commentary. The management was very optimistic when we spoke to them yesterday. So there's some follow-on buying there?
Yes, absolutely. The stock is up around 3% over 4,600 rupees for that particular counter. The two key issues this time round for Apollo was that the quarterly investments were the highest ever for Apollo 24/7, and the company says the burn rate has peaked. So that assuaged concerns. Now, Jefferies has written on Apollo Hospitals. They have a buy. The target price is raised to 5,375. According to them, revenue was above estimates. EBITDA was in line. Profit missed estimates, which was on higher taxes. The EBITDA was dragged down by the highest ever quarterly investments for Apollo 24/7. Quarterly investments have peaked and will come down as per management. The company is guided for Apollo Health Co., which is basically contains Apollo 24/7, to break even by Q4 of FY24. The company is also guided for higher hospital occupancy from Q4 onwards. In terms of EBITDA, they expect a 7% growth in FY24, around 8% in FY25. Citi, they maintain a buy with a target price of 5,420. According to them, they reported good traction across segments, believe the margin expansion streak will likely to continue over the next couple of years. So there is definitely a lot of positivity which is coming in for Apollo Hospitals at this point.
All right, Ekta, thanks a lot for that. So that's on Apollo Hospitals. Let's slip into a quick break. The market is really on fire, surging away now. The Nifty is up 150 points. Manish Hathiramani of Deen Dayal Investments will join in. He'll give us some trading strategies on the other side. Stay tuned.
Welcome back. We will be talking about the F&O space in just a bit. As of now, let's get talking about the technicals. We have a good market on our hands. We have the Nifty, which is above 18,000 and sustaining at those levels, and the mid-cap index, which is up over 200 odd points. Manish Hathiramani of Deen Dayal Investments joins in now to discuss what he's tracking today. Manish, well, we are closing in on the week. What's your recommendation on specific stocks as well as the index?
Good afternoon to you and to all our viewers. Well, I do notice that yes, we are trading above the 200 DMA. Things seem to be looking good. But 18,150, 18,160 really are the resistance points to look out for. And if you notice, we are resisting over there since the morning. Therefore, until we don't really get past, let's say, a round figure of 18,155 to be precise, I would not really be excited to go long. However, if we do cross that, I feel 18,300 should be the next target. Coming to my stock-specific action, I am working with two buy calls. My first is on Kotak Bank for a target of 1850, stop loss of 1750. We've had a good consolidation phase between 1750 and 1780, and thereafter we have broken out on above average volumes. The second buy is on an Infosys for a target of 1650. Stop loss 1575. The tech space seems to see some breakouts across the board, like Tech Mahindra and TCS. After crossing 1590, Infi has broken out of its short-term range, and we should be headed higher.
Just to add to what Manish has said, 18,155 is the technical mark is what he said as a resistance. If you corroborate that with the F&O data, 18,150 call has seen a fair amount of writing. The premium is 5 rupees. So those who are writing that don't believe that the market could go beyond that 18,156 or 155 mark as well. And were there to be a move above that, then these guys will have to cover their positions, and which would lead the markets much higher. So that's about the F&O part of the things.
Okay, I just had a couple of more chart checks for Manish, if we could get them on board. Manish, from the Nifty companies, a lot of these stocks are hitting fresh highs. So as we speak, M&M is at a fresh high. It's now up about 10% for the year already. It's almost at that 1,400 rupee mark. And the market cap of M&M is almost approaching 2 lakh crores now. Do you see more upsides technically on this stock, and anything else in the auto space that you like?
So M&M is actually, we had this resistance level of about 1391, which was the intermediate high that was created on 3rd of February. We have crossed that with just a trickle this morning. If we can keep above that, let's say 1395, round it up, 1430, 1440 should be the next target.
All right, take that point, Manish. Thanks a lot for that. In fact, now we do have some of the plates our directors pulled up for the option side. 18,150 call is the one that I was talking about. Continues to see a fair amount of writing. And for a premium of 7 odd rupees, it's telling you that the bears believe that 18,150 upwards could perhaps face some sort of resistance. But if that does get taken out, there could be case for a lot more short covering. On the way down, however, the region where we are at right now, 18,070, 18,075, is seeing a fair amount of support. And that's because of the 18,100 put writers. Almost a crore shares added in open interest for a premium of 40 odd rupees. So the bulls believe that 18,060 to 18,070 would be important supports to watch out for. All of these will be extremely crucial post 3 p.m. because that's when the weekly options expiry trade will play out.
Okay, all right, Mangalam, that's on the F&O space. We need to take a short break now, but we have a lot more to track in terms of what is a very exciting market at this point, at least in terms of the broader markets. A lot of stocks buzzing around. More on that once we're back. Stay tuned.
Welcome back to Halftime Report. Well, for now, a couple of stocks do deserve mention. SpiceJet is up almost about 10% right now, so do keep your eye out on that. Volumes are also picking up on SpiceJet. That's primarily because of the ATF price cut that was taken, the aviation turbine fuel price cut. So that, of course, benefits a lot of aviation companies. Indigo has a separate set of problems, so that's reacting to the news flow. But SpiceJet is the one that's up about 10-odd%. But on to some macro news now. India's goods trade deficit has fallen sharply in January to a 16-month low of $17.7 billion. The fall is a relief for the rupee and is due to a steep fall in imports. Lata has more details on all of this. Lata, over to you.
Well, I think the January trade deficit has many positives for the macros of the economy. The first one is what you mentioned, that trade deficit coming in a good, 16% lower than December. But it's not just that it is a 16-month low. The point is, even if you took the April-December average monthly deficit, it was actually 25.5 billion. So look at 17.6. It's a good 30% less than what we were ticking in the last 9 months. And the deficit, the reason is that it is largely because of a fall in imports. January imports was just about 50 billion. December was 58.2 billion or thereabouts. So January imports are also lowest in 16 months. And if you compare them to the average April-December monthly, they are again a good 17% less. We were ticking 60 billion every month. Now in January, it's only 50 billion in imports. And the key imports that have fallen, this is very important, it's gold and precious stones. And there's also a goodish bit of fall in electronics and chemicals and metals. I would assume chemicals and metals is also because prices have fallen. The other positive, and maybe the icing on the cake, is that services plus goods, if you take the composite trade deficit, it's down to just $1 billion. 1.2 billion to be precise. And this is quite an outlier number, because if you look at the April-December average, the monthly deficit goods plus services was actually 12 billion. So we have really, January has been a month of many splendors and positives. Very good for those of us who are tracking current account deficit and the rupee depreciation. This is certainly a strength. Just a little bit on the negatives, exports have also fallen. Exports have come in at 32.9 billion in January. That is, a good 8% lower than what it was in December. 34.5 billion. It's also lower than the average that we were doing for the last 9 months. Key exports that have fallen are textiles, engineering goods, gems and jewelry, all labor-intensive goods. So we should be unhappy about that as well.
All right, Lata, take that point. But before we just slip into a short break, keep an eye out on the markets. The Nifty banks moved into the red, and that's pressuring the Nifty as well. The Nifty is now sitting with a gain of just about 45 odd points. The Nifty bank components, ICICI Bank, Axis Bank and SBI are the ones which are the key culprits of underperformance. Let's see whether it does continue its underperformance or maybe at some point sees a bit of a recovery. We'll monitor that. For the last few days, the Nifty bank actually has been the bad boy for the markets. Take a short break, come back, get you more on the markets and individual stocks.
Welcome back to Halftime Report on CNBC-TV18. For now, let's get to talk about some stocks. By the way, Tech Mahindra is the one that's really surging, 5.5% higher now on Tech M. But Aurobindo Pharma's in the news as well. Ekta, why is that?
Well, yes, there's positive news which is come in on Aurobindo Pharma, where APL Health, which is the company's arm, two of the units which are housed in that particular arm, Unit 1 and Unit 3, were inspected by the US FDA. This inspection took place from the 9th to the 18th of January. And it is positive news because the plant has now been classified as a voluntary action indicated status, which basically means that it's given the green signal to supply to the US. Now, Unit 1 manufactures OTC, which is over-the-counter formulations. Unit 3 manufactures dermatology products or skin products. Now, units which were cleared recently by Aurobindo should come up for you. And as a whole, then that becomes a positive piece of news because of Aurobindo simply having a couple of units, in fact, seeing the light of day from the US drug regulator because it had been in the dock for quite a long time. So Unit 9, for example, had an official action indicated status. It was just issued a voluntary action indicated status in Feb of 2022. Unit 11 had a warning letter. It received a VAI status again in November 2022. It's one of their biggest API units. Unit 7 also had an OAI, which is an official action indicated status, and they were issued a voluntary action indicated status in August of 2022, which is their biggest formulation unit, basically giving them the go-ahead to go ahead and manufacture for the US. So that's an Aurobindo, stock up around 1.5%. But it was a strong set of fourth quarter earnings for Nestle. Revenue was up 13.8%, EBITDA was up 15.4%. Mangalam, what was the volume growth like and other statistics?
Well, the volume growth was mid-single digits, mildly lower than what the street was anticipating. This time, perhaps it could have been on the higher than expected price hikes that the company would have taken to mitigate the inflation, and that's telling on their operational performance. So I would go with an operational beat on Nestle, and that's something that the street likes as well. Revenue mildly below expectations, 4,257 crores versus expectations of 4,375 crores, but they made up for that with a big jump in their EBITDA, 977 crores. The street was working with a number of 935 odd crores. A margin compression was expected, but the company's gone ahead and increased their margins 23% versus expectations of 21.4%. The gross margins of the company, they've declined by about 200 basis points, and that's because of the massive inflation that we've seen in dairy products, etc. But the company has managed to curtail their other expenses and taken some price hikes to maintain their margins this time around. The domestic revenue of the company has grown around 14%. Exports have grown by about 17.1%. The reason why Nestle has grown faster than all the others is, one, because of their resilience of the snacking category. We've seen that in Britannia's numbers. And secondly, they have a higher share of revenue coming in from the urban areas, and in rural as well. They are expanding their presence, so they are not immediately faced or affected by the slowdown that we're seeing in rural India. Going forwad, the big triggers for the company will be, one, scaling up their pet care business that they've brought into their own fold, which is Purina, and secondly, they have the baby food product Gerber coming into India as well, which is a high-valued, high-margin product too. So let's see how these two verticals play out. The street likes the operational performance, as a result of which the stock is higher.
Okay, well, thanks a lot for that. The market has actually given up a lot of its gains, so it's really gotten volatile in the last 10-15 minutes. The Sensex, as you can see, has moved to the closer to the low point of trade. The Bank Nifty is now in the red, and the Nifty has lost all its early morning gains as well. I think good time for us to take a break on equities and talk about the commodity markets when we come back. Manisha Gupta will join in. She has Vartika Shukla, who's the chairperson and managing director at Engineers India. So do stay tuned in for that.
Welcome back. Let's talk about all things commodities. On the sidelines of the India Energy Week, which took place between February 6th to February 8th, Manisha Gupta caught up with Vartika Shukla, who's the chairperson and MD of Engineers India, and spoke with her on a whole host of issues, like the Prime Minister stressing on the renewable sector, capacity utilization of Engineers India, and the energy sector transition. Listen in.
Our teams are engaged with the Ministry of Housing and Urban Affairs under the aegis of the PMO office for looking at waste to wealth. And just last week we have signed an MOU with them to look at million-plus cities, which is also part of the Prime Minister's target and part of the budget speech as well, to look at monetizing the waste, both the organic waste and the dry waste, into putting energy into the system, bringing clean, affordable and sustainable energy onto the grid. So this is something which is very dear to Engineers India Limited. We are also part of the first bioethanol plant of the nation, the Assam Biorefinery, which is also bringing on about 180 KLPD of second generation ethanol. So we are part of this whole initiative in a very, very focused and in a very integrated manner with the policy of government of India.
All right. You did put out some agendas that you are on and some numbers as well. But do tell us about the kind of capacity that you have built until now, the kind of spend or investment that we've seen in the space.
So we are, as you're aware, we are mainly into refinery and petrochemicals. You saw the Honorable Prime Minister, heard him yesterday, where he announced a 450 million ton refining capacity in 2040, and that brings huge opportunity to us in terms of business growth. This refinery is not just going to be the refinery standalone, it will be highly integrated with petrochemicals. And to share that we are working on the Barmer refinery in Rajasthan for the HRRL, who's our client under HPCL, and that's having about more than 25% petrochemical products. We are also working with a lot of clients. I would be constrained to share the names on several integrated petrochemical opportunities. You know, spearheading the shift from the core refining to an integrated refining and petrochemical. And I'll also be happy to share that we are also looking at these investments, particularly which have been announced in green hydrogen. You have seen the outlay which is there, looking at end-to-end support in the transition of India into green energy. We are also a part of the growth story and the kind of initiation of this technology in implementation with several of our clients, not only into setting up the facilities for green hydrogen, but also looking at blending into the pipelines.
Ms. Shukla, would you say that you have to be on your toes really? Because until now it was energy. Now it's about clean energy, accessibility, as you said, energy security, even affordability also to go with that, and to ensure that it's inclusive. How are you looking at all of these boxes being ticked?
I quite agree with you. You need many hands, many minds, and we have a great team in our organization who is very well positioned with the business strategy of the company for EIL to grow in tandem with these growth opportunities. So we have a very focused but diversified approach, and that helps us put our teams into buckets, put ideas into business opportunities, and then converting them into actual businesses. And I have stories to tell in terms of what kind of breakthroughs that our teams have done in all these areas. And I think the uphill task is, to travel even to greater heights.
Specifically EIL, what collaborations, what tie-ups, where are you shaking hands nowadays?
Sure. So we have already shook hands with Chempolis, our partner in the area of biofuels. It is not just the ethanol space, but biofuels holds a lot of other value chains in terms of valorization of several other biomasses. So there we are very well positioned, and we hope to see that burgeoning into a lot of business opportunity in the future. The other space we have in strategic storage, and we are looking at with the government of India in terms of giving the technology to bring in, in times today, the nation is at a position of a lot of strength on a global arena. Nobody can forget that India is there, whether you see crude oil sourcing and the way we've diversified our basket, the well-positioned financial, pricing that we have on many of the things. So in that particular context, we see strategic storages of crude where we can actually have an upper hand in the globe. So India needs to have that lever and leverage, and we as EIL are looking forward in those areas to partner with international players as well.
All right, so that was some insightful conversation coming in from the management of EIL. What we'll do is take a short break, come back and tell you what else is lined up. Business lunch will take all the market action and the news action here.